Good afternoon, traders. So per the change I made in this trade as of yesterday, I want to come back in because I mentioned then that I might be closing this thing out today, and I am going to close this trade out. Again, this is a paper trade, but I'm treating it like a real trade. So as you'll recall, let me just take you back in time a little bit here, and I'll put the prior video to this one. I'll put it in the end screen here so that you can relate back to it. But just to kind of give you a sense of how this trade has been adjusted, I want to come back into Save Trades. And these are the three versions of that trade. So when the trade was very first put on, it was put on as basically a bull call spread, looking just like this. And if we had done nothing to that trade is going to basically wrap up here very soon at right at $1,000 profit. However, as you recall, a couple days ago, our market was pulling back so that this was down, and only had probably about $200 in profit, and our markets were starting to look a little weak. So I had a lot of concern about further downside. So going back about a week or so, I came in and I added in some upside risk that put us into this trade. So I added a long call to the trade, basically putting it into this configuration. Now, had I left this alone, had I not touched this trade would be at about $1,400 in profit, and I would probably just let this trade expire worthless. Let the trade close out, let it expire tomorrow, and it would expire at its full profit of $1,575. And the reason I'd let it expire is because I got a nice wide tent here from 47.35 up to 48.10, and it can expire anywhere in there at the end of the day tomorrow and be at full value. So if I were still in that configuration, that's what I would do with this. But if you remember just 2 days ago, let's come over and take a look at our markets. We were all the way down here. I say all the way, it's not that far, but at 47.14, we were down here, right in that area, looking to potentially break through these lows. And that's what I wanted to protect against. Because if you do break through a prior low, oftentimes you're going to break with some force. And that thing would move rapidly to the downside from there. And I did not want to get caught in that scenario. At that particular time, I felt like I was better reducing my downside risk and adding upside risk instead. And again, that video will be in the top up here for you to look at to see that analysis of literally just a day ago when the market was all the way down here. So now market's ripping back up, and let's come to the actual trade that I modified this to yesterday. So what I did on this yesterday, again, go back and take a look at the video of that time and what my assessment was. My fear was when we were trading all the way down here that if we went through that, we could be down $1,000 in the blink of an eye. I did not want to take that downside risk. So in exchange, I added this upside call spread right here, and knowing that that was going to reduce my profitability if the market ripped to the upside. But again, I made the assessment at the time, which is the type of assessment that every trader has to make on every trade on a very regular basis, depending on what intervals you trade. So I chose to eliminate the downside risk at that point, add in some upside risk in the form of this spread right here. And this thing is going to expire tomorrow. So come end of day tomorrow, this T0 line is going to drop down right to this dashed line there, which is about $450 in profit, something like that. So if I can get a higher level of profit right now, before the rest of that decay takes place throughout the remainder of the day and tomorrow, I want to do that. So in order to do that, basically what I do is I just, let me come back here to my account and save trades, and I simply can come in, click on this trade, and here's all the details on the trade. These are my notes on the trade, and these are all the various positions. This is the return on the trade. You can see this gave up $120 today. Had we stayed at a lower market level, this thing would have had a much nicer return on it. So I'm going to come in now, and I'm just going to close this trade. And here's where it's assigning the value to each one of those legs. Now, if I had done a live trade here and I had actual live fill prices, I may very well come in and fill those out. But right now, I'm going to take what the program's giving me and say, close the trade. So that trade is now shut down and closed, and it was about a $650, $700 profit, somewhere in that range. So not quite as good as what it could have been if I just left these fully alone. But again, if we take a look at like this one, the original trade, and we were down again, let me just take a look. We were down here at 47.10 roughly. So we were, I mean, had I had this original trade on, never touched it, a couple days ago at 47.10, I would have been down about $500 in that trade. And looking at the fact that if that trade broke through to the downside, or if that value of the SPX broke through to the downside, it was going to accelerate down fast, and in a blink of an eye, I could have been down $1,400. So I would not have wanted to be in that position. Now, again, the second position I had, but had I left that alone, it would have been up $1,000 here today. The other one, again, just to kind of go back through those, this is the one where I simply added the first long call spread to it. That one would even be more profitable, and it was more profitable because I sold this spread as well, and this spread never got tested. But again, as I was down to 47.10 here yesterday, this trade was about at a break-even point. I think it was still up at the time I made the trade. I think it was still up about $100 or so. But it could have also been down $920 literally in the blink of an eye if the market moved down, or even if the market did not move down and the trade stayed right here where it was, or the value stayed right there where it was at 47.10. Come the end of the day tomorrow, it would have been down $1,000. So again, those are risks I did not want to take. That's why I added this call spread up here. And that's why I did the second call spread that I did, the trade we just closed out, because that then took this risk totally off, moved it up to a no-lose trade to the downside. So hopefully that all makes sense. I urge you to go back and kind of watch through the progressions of those three trades. And of course, hindsight is fabulous. We can always look back and say, oh, if I would have only left that alone, I'd be up $1,500 instead of $670 or whatever it was. But traders can't do that. You're never going to hit the max profit. Hopefully, you'll never hit the max loss in options tradings because you'll learn how to adjust your ways out of those. You have to always just think mentally, as a trader, did I make the best decision for me at the time I made it? And if you can look back on that trade, again, don't look at what the market did from there. But if you go back to that particular position and that place and time, again, for example, here, if I went back yesterday and I said the market was trading at 47.10 and I was down $235, and I was afraid of that being down this much, does it make sense that I didn't leave that trade alone? And in my mind, yes, that makes perfect sense that I did what I did on that trade. Sometimes it doesn't. Sometimes I'll look back on a trade and say, what was I thinking there? Why did I do that? But 90% of the time, as a more experienced trader, I feel like I did make the call that I needed to make at that time, given what I was seeing in the market. So with that, I'll wrap it up. Thanks so much, everyone. Take care.